Hey guys, here's your quick look into the markets this week. Interest rates are still hovering near the best levels of 2025 as we head into a huge week. The December Fed meeting is this Wednesday, December 10th. This past week was really quiet in the bond market. With no big economic reports and no Fed speakers, traders pretty much stayed on the sidelines. When nothing major drops, market tends to drift sideways, and that's exactly what happened. That changed on Tuesday with a softer ADP jobs report. It showed weaker private job growth, which added to the idea that the labor market is finally cooling. Because of that, the odds of a rate jump next week jumped to about 90%. We also saw some global action. Japan hinted at a rate hike, which pushed their 10-year yield to the highest level since 2007. That matters here because global investors shift money wherever yields look best, of course. Higher yields abroad can push our rates up, but luckily our bond market bounced back quickly. Right now, 30-year mortgage rates are around 6.19%, down slightly from last week and 0.5% lower than last year. The 10-year treasury is holding steady at 4.09%, and everyone is watching that key 4% level. If we break 4%, rates could take another leg lower. Looking ahead, next week is one of the biggest weeks of the year. The rate cut itself may not move markets much, but the Fed's updated economic projections, especially the dot plot, definitely could. That's where we see how many rate cuts Fed members expect next year. Fewer cuts could push rates up. Of course, more cuts could push them lower. We'll also have fresh treasury auctions, which matter since yields are sitting near year-to-date lows. Strong demand would support lower rates. Weak demand could cause rates to bump up. So buckle up, this next week could finally break the quiet market we've been sitting in. I'm Yessie with the Taylor Group, keeping you updated every week.